Thank you for the warm welcome, and thank you, audience, for tuning in. This is indeed very exciting research to be sharing with all of you. I guess by way of introduction, I want to say that this is less so an economic development strategy itself, although it might be perceived as such, as we'll see later, than it is research that analyzes one of the most popular tools that are used for local economic development, namely tax increment financing. In particular, it investigates the state of affairs in the state of Michigan regarding keeping tabs in an accounting sense on how active TIFs are being used. Let me say a few words of thanks first and foremost. Any type of scientific endeavor is never a singular enterprise. There is always a team of people behind it that make it possible. I'd like to thank first and foremost my research team, Cassie DeWitt, Chris Herlick, Alexandra Markiewicz, and Carla Kayanan, who've been great helps in putting this together, and so I want to absolve them at this point from any errors that might have crept in. These are my sole responsibility. Plus we have, of course, being, when we first started with all of this, we were relative novices in this field, and we have benefited from a variety of conversations, insights, and shared information from people, both at the University of Michigan but elsewhere in the state, from Tom Ivanko to Eric Lufer, Laura Rees, Gary Sands, Eric Scossoni, and in the broader sense the community of Michigan planners that were present when I gave a first outline of what I'll talk to you today about in October of last year. This really all started off, well, I guess, let me pause for a moment here. I definitely must thank MSU, the University Center of Regional and Economic Innovation, and the US EDA for making this research possible. I think we hope that this is as much the beginning of a larger research agenda as it is essentially the end report on the first segment of what we've produced. And so without the further ado, before I go too deep into the overall matters that we want discussed this afternoon over the next 45 minutes or so, let me give you a bit of additional contextual background. TIFs, tax increment financing, is a very important financing mechanism for local economic development. That's well known. That's nothing new in and of itself. When I started this work, maybe 12 months ago, thinking about it broadly in terms of the structure of financing local economic development, the simple question arose, well, since everybody seems to be talking about TIFs, how important as a revenue-raising mechanisms are TIFs really? We know in the broad context of things that municipal governments in the state of Michigan in 2012 roughly raised $12 billion in terms of property tax revenues. So out of those $12 billion, how much is being raised or being captured through tax increment financing districts around the state? And so essentially I was after one number. I was potentially going to be happy with a range estimate, as all statisticians should not rely too much on point estimates, but a range would have helped to essentially assess how we know that the TIFs as a political discussion point are very important, but economically how relevant of an instrument are they? And it turned out that this answer wasn't as easily, this question wasn't as easily answered as I would have thought, which led me down to the path of investigating, and in the course of that investigation I came across a variety of people who have been asking similar questions, but perhaps we were the first ones to sort of go about this in, to date, the most exhaustive and systematic approach. It turned out that we simply don't know, and what I was not, and my team were not able to do over the course of the research over the last 6 months, is actually to get too much closer to such a point estimate in terms of how much revenue is being raised. But what we in turn were able to establish was a blueprint for an approach that if someone were to pursue this question more systematically, then this is how it could be done, by creating essentially a central repository that would collect easily accessible and readily digestible information on all aspects of TIF activities around the state. Now, essentially much of my presentation will thus focus on, once we go through sort of a somewhat pedestrian minutiae of how TIFs work and what they are and what some of the problems with TIFs, some of the pros and cons associated with TIFs might be. I will then want to spend a bit of time talking about the reality of TIF-related reporting in the state of Michigan and the importance of the regulatory process of how TIFs are handled. Our solution, what we call the MIRTIF, the Michigan Repository of Tax Increment Finance Prototype, is essentially a technical implementation of a blueprint prototype of what such a centralized database could look like. And I will outline a few additional steps of what we have in mind where additional research could head. Now, in terms of, I have to admit, this is the first webinar of this type that I'm giving, so I know that there are people out there tuning in or have tuned in. There is the ability to interact with me by typing messages for me, and one thing that I'd like to do, unless it's super urgent, and I don't think the computer interface allows for an urgency button here, I'll go through the presentation and then leave some time towards the end where you can type, if there are any questions, where you can type questions to me, and I'll try to answer them as best as possible. Now then, in principle, you know, what is the overarching umbrella? What are the big questions that are framing our research? And as somebody who works in the area of the political economy of public finance, what question is more American, or what phrase is more American than the worry to be taxed without representation? And indeed, in local public finance, this taxation without representation is a very, very important concern, and it's a growing concern. Let me explain why a little bit. America has witnessed at the local level a spectacular growth of so-called special purpose governments. These are non-municipal governments that get established for a variety of purposes. This can be school districts, this can be other types of service delivery mechanisms. The majority of those special purpose governments have the ability to raise taxes. In a sense, this has led an extraordinary fragmentation of the public budget at the local level. Special purpose governments throughout the United States account for well over a third of all local governments. There are roughly 35,000 special purpose governments throughout the United States. Now, the taxation without representation concern is a fairly straightforward one, namely that if those units, most of them, have appointed and not elected officials, are able to raise taxes in some way, what are the public accountability mechanisms to ensure that these units are exactly spending the money that they've raised revenue for in a way that the public wants? Now, in a democracy where we have the exceptional privilege that we can tax ourselves by public consent, accountability is an important mechanism of how public money is spent. Now, usually, the way that this happens is, of course, through the regular budgetary process that is overseen by public officials. At the federal level, this is the congressional budgetary oversight. The president doesn't have the ability to set the budget himself. He needs to run things by Congress. At the local level, it's elected officials that have essentially hold the strings to the public purse. Now, if you have special district or special purpose governments, it's less clear who checks precisely what the money is spent for. One would imagine, in a relatively naive and unified view of the world, that there is such a thing as a unified or consolidated budgetary oversight at the local level. In principle, and in many of our textbooks, this is precisely what we assume, but in reality, the fragmentation of a variety of local budgets, of local districts, is, of course, a very state-specific and ultimately local matter. In the state of Michigan, you have all sorts of historically grown, unique government entities at the local level, all of which might, in an overlapping sense, work and tax the same people and the same entities, in the case of firms, over a specific period of time. There are county governments, there are township governments, there are village governments, there are city governments, and so the question that largely arises then becomes, how do we make sure, how does the public know what taxes are being raised and what money is being spent? And in the absence of special purpose governments, in the absence of any appointed instead of elected officials, the notion of shadow budgets is an irrelevant one. However, the reality of local public finance in America today is that there is this, what we call shadow budgets, these are the budgets of these entities. These are taxes raised, revenue spent, that are really difficult to account for by the public. And this gives rise to what technically we call the potential, at least, for something that is called fiscal illusion. Fiscal illusion is essentially the concept where the public misjudges how expensive it really is to provide public services. And again, in a democracy, the public accountability mechanism to ensure how much something costs in terms of local services really is the key of the matter, because at the ballot box we decide how much we want to tax ourselves at the local level. And I think in the current political climate in Michigan, with Proposal 1 coming up, this is an important case in point. Namely, part of the problem with Proposal 1 is that it is relatively intransparent or unclear as to how the revenue that municipalities will lack because of the abolition of personal property taxes will be shared or made up for via the state level. And so there is, in a sense, if we don't have complete transparency and, in a sense, complete stock taking of what is taking place, we cannot make politically sound and rational, in that sense, rational political decisions. And so the bottom line of all of that introductory rambling, if you like, is the following. If we don't know what the fiscus is up to, i.e. public officials, elected or not, if there isn't transparency as far as this is concerned, we cannot make sound public policy decisions. And as far as TIFs are concerned, this really was the case that got us started on our research. So as I said in my introductory remarks, what we wanted to figure out is how heavily do municipalities in Michigan really rely on TIFs relative to overall revenue rates from property taxes. If indeed, and the future of TIFs was and is being debated politically in Lansing, the future of TIFs, if indeed TIFs are such an important tool, we ought to know how important that tool is. And so what we also ought to know is what types of TIFs are being used across the state. And as we'll see, there are at least 7 different types of enabling legislation that give rise to different types of tax increment financing at the local level. Then another perhaps more subtle question might be, how has the structure or how has the fiscal health of Michigan municipalities evolved over the economic cycle? In particular, we might want to be interested in asking, in having the question answered, how heavy the reliance on TIFs has increased or decreased since the financial crisis. And the crisis has of course left its mark on local budgets. And so in that sense, we might ask to what extent are TIFs related to episodes of financial instability at the local level. In that sense, any TIFs have a dual character. To some in the local economic development community, TIFs are really just an economic, local economic planning tool. They make things happen, and so that's that. At the other end, TIFs also are a financial instrument. Certain aspects of tax increment financing or the enabling legislation allows municipalities to get into fairly advanced financial dealings. And so TIFs, because of that dual character, raise particular regulatory challenges. That means, what role should the state play in terms of monitoring what people are up to with TIFs? Having the enabling legislation in place is one thing, but then monitoring what municipalities are doing as far as TIFs are concerned is a very important feedback mechanism for state legislators and regulators to make sure that the supervisory process works. And this is an aspect of my research that is perhaps has unlikely linkages for local economic development discussions into the realm of high finance, because local economic developers usually don't think about the Wall Street implications of their actions. But as we'll see, TIFs indeed do have Wall Street implications, particularly to the extent that TIFs allow municipalities to raise revenue on the one hand, and to pledge that revenue against financial assets such as, well, assets to the investors, but financial liabilities such as bonds that they can then use to make specific investments. And as such, it's the financial nature of the whole TIF, of TIF as an instrument that should be more readily be able to discuss amongst politicians and regulators. And as we've discovered, without any sound information on this, it's virtually impossible to have a sound regulatory debate about TIFs. Imagine, if you will, for instance, if the FDIC, the Federal Deposit Insurance Corporation, which was established in response to the Great Depression in 1934, with the sole purpose of making sure that your and my deposits in a local bank are secured or guaranteed up to now, after the crisis, I think it's $250,000. Imagine that the FDIC didn't actually know how many banks were out there and what the overall sum of aggregate deposits in any given state were. Yet it would have a federal mandate to guarantee deposits. It'd be pretty ludicrous to assume that there's such that the FDIC could operate without the precise monitoring and knowledge of how it implements its policy mandate. And in many ways, whilst we can't necessarily stretch this analogy too much, one of the bottom messages for me at this stage that our research highlights is given the nature of TIFs as a financial instrument, without us having a clear sense of who uses TIFs to what extent in the state of Michigan, how important are they as a tool of revenue raising, we cannot and should not, I would argue, engage in any type of legal reform that might have beneficial or detrimental impacts on the budgetary affairs of local entities of government. So with that, this is the larger the macro story that's motivated our research. We can now move to perhaps and of course I'll increase the speed a bit, so I won't be spending as much time on individual slides as I have on just those two starting slides. Contextualize our research a bit more. TIFs are being discussed now in Michigan again, also largely because of the national context, which has seen with Governor Brown in California the recent abolition about 2 years ago of redevelopment agencies that have heavily relied on TIFs as a financial instrument. And so up and down the nation, there was, at the state level, people were worried, and locally, people were worried that what happens if enabling legislation disappears for us to use on that most popular tool. And so there is an increased urgency to carefully evaluate whether TIFs are indeed potentially weapons of financial mass destruction, or whether they are beneficial. And without putting you on too many tenterhooks, I think the answer is fairly straightforward. There is the good, there is always the bad, and there is the ugly as far as TIF usage is concerned. But again, in order for us to have a rational debate about how much of the usage is good, how much of it is bad, and how much of it is really ugly, we need to know what the numbers are. And unless we do have the numbers, we can't really engage in such debate. So historically, TIFs were first used in California in the early 1950s as a funding mechanism to allow municipalities to match their part of federal redevelopment grants. Over time, as federal funding has shrunk, municipalities have become to rely on TIFs to fund redevelopment. TIFs were originally, and in many ways still are as far as the language in the legislation is concerned, TIFs are an instrument to finance redevelopment or blight broadly conceived. Essentially what has happened over the years is that the definition of what is blight has become so broad, so lax, so creative, that today although we don't have the actual precise numbers, we can no longer say that TIFs are exclusively relied for blight remediation alone. That still is, of course, an important part, particularly in Michigan, but TIFs are also an alternative way to raise money without, explicitly at least, having to raise taxes through the general fund. And that brings us back, in a way, to the fiscal illusion aspect. And once we look at the precise mechanics of TIFs, we'll see the extent to which TIFs are either contributing in creating additional fiscal illusion on behalf of the public, how expensive things really are to run on the ground locally. And so, in a sense, a critical question to be asked about TIFs could be, well, if they have, what are we to read into this development that from being a tool that was exclusively developed for use to emergency finance blight-related activities to such broad usage, what has happened? Why is it that local governments feel the need that they have to rely on TIFs so heavily? and I'll come back to that question over the next half hour or so repeatedly. Now, broadly speaking, the mechanics of TIFs, at least again in the textbook, and I think this is an important point that I want to make. TIFs are a great idea, and they usually make sense using such diagrams as the one that you see up now. They are in many ways the perfectly closed system. The political reality is such that once you relax the severely restricting assumptions that make this graphic work, you will soon find yourself in a situation where the actual operational aspects of such instruments like TIFs are much more complex, which contributes to many of the imperfections that we're seeing when TIFs are applied. And so but whilst accepting that in real life things are complicated, let's look in an idealized setting what TIFs are all about. The basic assumption is that if you look at the panel on the left hand side, that you have, look at the ellipse, you have a municipal border and you divide that, you draw a boundary, you determine a district that you'll call a TIF district. And so you have a non-TIF component of your municipality and you have the TIF district. For the TIF district, assume that there is severe blight. Maybe it's an old brownfield. Maybe it can in the 1950s. It could have been a shelled out, burnt out part of downtown post clearance, and you want to revitalize that district. Now, if you look at the chart immediately below, looking at the assessed values of those two areas, so the assessed values, property values of the TIF area versus the non-TIF area, a fundamental assumption in the mechanics of TIFs is that we assume that the assessed values of properties in the TIF area are a lot lower than the ones in the non-TIF area. And then the logic for establishing a TIF runs as follows. Because we want to revitalize that area with some redevelopment, however defined, it can be specific infrastructure development, it can be other types of public investments. What we want to do in order so that we don't have to raise taxes across the municipality, we will capture any increment in the assessed value that is due in the TIF area, that is due to this upgrading of the public infrastructure or the general state of the built environment in this area. And so we will capture this increment, and this is the dark blue shaded area symbolized in the lower part of the panel on the left hand side. We will then use that increment to essentially pay for the development. So there are essentially these four steps. First, you mark an area for development. You say this is where you want, this is where you think the local economy needs a helping hand in terms of upgrading. You assess the property values within the boundary. You set a base year. From this year onward, all increases in the assessed values will be captured by the TIF district that can then pay for development in the hope that overall economic growth and development will take place not only ultimately in the TIF district but through something that economists call spatial externalities or spatial spillovers. That rising tide in the TIF district will lift or spill over or be shared with the surrounding areas of the non-TIF district, and so everybody's happy all round. In principle, it's a great story. There is a small technicality if you think about this example, which is mechanistically assume in year 0 you freeze the assessed values in the TIF area, and then the next year you want that assessed value to go up, you will gain incremental taxes, but those taxes will surely not be enough to pay for any large-scale development. So how do people solve that problem? Well, the answer is finance. And so in many instances what happens is that the municipality, or through the TIF district, then goes to the capital markets and raises money that is needed for the public investment, which is being paid back in future years. And how is it being paid back in future years? Through the increments that happen in the TIF area. On the surface of things, this is a fantastic idea. There are two types of complications or reality checks, usually. The TIF financing mechanism works, of course, on the assumption that one, the investment in the TIF district will raise property values. And it will raise property values not only in 1 year, but it will raise property values pretty much indefinitely, or at least for the duration of the existence of the district. One thing that I can amend, or should have said in the beginning, is that once a TIF district is created, it doesn't keep on existing in perpetuity. Such a district is time limited and ranges such. The sunset clauses associated usually with TIF districts are anywhere between 15, 20 to 30 years. So after 30 years, the TIF district ceases to expire and the additional revenue is no longer just exclusively captured by the TIF district. Now, if you have borrowed against those future assumptions of future property value increases, the problem is, of course, that once you have gotten the financing through bond issuance, you've made the investment, say in a public parking structure plus some upgrading in infrastructure, and it's time to pay back the bondholders, pay them interest and principal, and now your assessed values in the TIF district stop growing. Or even worse, as we've seen in some instances after the crisis, the assessed values in the TIF area decline, in which case you have what is technically called negative tax capture. In other words, in this scenario, unless there is continual increases in the assessed values post the baseline year in the TIF area, you might not have the money to pay back those bonds. And therein lies one of the many problems of TIFs as a perfectly closed loop system that always works in the textbook and might not necessarily work in the real world. The city of Troy scared their bondholders in 2002 when it declared that because it wasn't collecting enough incremental value in some of its TIF districts, it might default on the bonds that it has obtained from investors earlier. In other words, it just said the textbooks didn't play out in the way that we thought they were. We might strategically default on some of our TIF-related debt. In many ways, Troy was therefore doing something that Presidente Kirchner's Argentina has been continually doing to bondholders, namely borrowing money and then forgetting that they have a multi-year commitment to pay that money back. In other words, changing their mind on how serious they are about paying that money back. Now, why is this a problem? It's a problem to the extent that once you play this game with investors, the next time you go back to the capital markets to raise revenue, the price will have gone up for you to actually raise the same amount of dollars. And so indeed, as a result, the city of Troy, after this event, is now no longer to raise money, despite the fact that they technically then decided not to default, they gave bondholders such a scare that they were, with the threat that they were about to default on their TIF debt, that when they now go and want to raise money for other purposes, the price of borrowing that money has gone up. And then the question is, well, who's paying that higher price? And the answer, as we have been painfully reminded post the crisis, is the taxpayer. Right. One additional complication arises between the textbook reality and the reality of TIFs in the real world, which is the right-hand side panel, which is that in many instances, because of special district governments such as school districts and other types of governments, like in the case of Detroit, the DIA, or the zoo, there are multi-functional governments that are superimposed on any given TIF. Now, what happens with a TIF is that the TIF district also captures the revenue that is over and above the base year assessed values that will be assigned for that district. And this is what when people call revenue capture. In the case of overlapping governments, TIF revenue also captures, most prominently in this example, the revenue that over and above the base assessed value line would go into the coffers of school districts. And so now you can imagine that this means that non-TIF local governments, non-TIF enabled local governments might be fairly skeptical about this specific way of revenue clawback that TIFs are doing. And incidentally, this was part of the political debate that surrounded the millage capture of the DIA district and Detroit Zoo district that got the issue discussed in Lansing. Without going into too much technical detail, there are ways in which at the outset of a TIF, a given school district, for instance, can withdraw itself from having its revenue captured through an administrative process. This is what's commonly called opting out. And so the local governments, the overlapping governments that are at risk of having their revenue captured through TIF districts have in Michigan the administrative option to opt out. I've already spoken a little bit, and I don't want to go into too much detail about the minutiae of how local government finance works, but the general takeaway from this slide is that as a municipal government, you can essentially finance yourself on a pay-as-you-use or a pay-as-you-go basis. A pay-as-you-use basis in public finance is essentially if you issue a bond that is secured by future tax receipts so that you have the money now to spend on a big project. The pay-as-you-go mentality is you can only ever spend as much as you have raised with current revenues. The obvious drawback from pay-as-you-go type of arrangements is, of course, that the type of particularly capital investment spending is fairly limited. In fact, it's limited to the amount of money that you currently have in your coffers from existing revenue raised. And so, what does that mean? In the pay-as-you-use setup, where a bond is being issued, and the bond here being a marketable security, a loan that can be public debt that has a principal and interest payments that need to be paid back to bondholders, where the money is obtained instead of directly from a bank through a variety of issues. The issue then, as far as the question of fiscal illusion is concerned, is that it might raise the illusion that by issuing debt you can get away with things that you couldn't if you had to increase taxes. And that's a larger question that again our research was hoping to address, to the extent that how does the usage of TIF trick people into believing, or trick the public, and I use the language loosely, trick the public into believing that by borrowing for things now, you can get away with making investments that you may not have to pay for later through higher taxes. Okay? And so TIFs are a very expedient way in which to issue debt. And why is this particularly attractive? Well, because certainly at the state and at the local level, there is often a limitation on how much debt, general obligation bond debt, for instance, can be issued. And so TIFs can be a very convenient way to issue additional debt that in a way doesn't count as debt, but it is. What do TIF districts look like? I'm showing you here a screenshot of a TIF inventory, probably the most famous and most often cited inventory of TIF districts of the city of Chicago, and you can see that TIF districts can take all sorts of spatial shapes. In some instances, they can be overlapping. In these instances here, you see that sometimes they can have very strange geographies, and that is in and of itself a very curious aspect of TIF financing, namely that how these boundaries are drawn. And what does that remind us of? It reminds us in many ways of electoral gerrymandering, where the boundaries are drawn such that political constituencies get created or reshaped in particularly expedient ways for one set of political interests versus another. And it's not too dissimilar with TIFs, certainly in the case of Chicago. From an economic perspective, there is no way of really arguing why some of these very strange enclaves and exclaves, as far as the TIFs are concerned, should really exist. And ultimately, this is all part of the political process. At least in the case of Chicago, there is a fair amount of transparency that we know what these TIF districts are, how much revenue they're raising, how long they have been in existence. And my naive hope and my team's naive hope was at the beginning, at the outset of this project, that we could produce such an inventory, not for one city, but for the whole state. And so let me talk a little bit about the specific political context in Michigan, why, in addition to some of the issues that I've mentioned, TIFs might receive particular attention in Michigan right now. One of the earliest stories, in addition to the Troy story about the threat of a TIF bond default that I mentioned to you in 2012, dates back to before the crisis, where the Battle Creek DDA received a nasty shock when the Kellogg Corporation, which was located inside in one of the TIF districts, closed down its Battle Creek plant, which had devastating effects on the TIF area in it. And so in addition to needing additional TIF financing to fight blight, this incident in Battle Creek has essentially highlighted the fact that we cannot assume that assessed values inside of a district, of a special financing district like a TIF district, will always go up, because there are unforeseen large-scale events that will have a significant impact on assessed values. The other question really is to say that, well, TIFs are allowing a part of the government to capture taxes and to use them for specific purposes that are outside of the general fund, and thus are not necessarily automatically politically accounted for at the ballot box. So why should we allow government to do this, local government to do this? One answer might be, well, it works, it creates jobs, it revitalizes areas. The question then becomes, but does it? And so one of the perhaps most perplexing aspects of of this discussion about tax increment financing in general is that the evidence, the scientific evidence of how well TIF revitalization works is not unambiguous. We simply don't know how well TIFs actually do work. One of the many problems in assessing this is what policy analysts called the absence of the counterfactual. We simply don't know what would happen to an area if we allowed for a TIF versus what would happen to an area if we didn't allow for the TIF. There is substantive evidence that in the city of Chicago, for instance, many of the TIFs, the tax increment financing districts, do not pass what is technically called the but-for test. In other words, would development have happened but for the investments that were financed through tax increment financing? And the truth of the matter is it's sort of a 50-50 hit and miss. There is evidence from Wisconsin that shows that property value growth was the same in TIF and non-TIF adopting municipalities. And so on the scientific side of things, we have a hard time showing that TIFs are an effective instrument for what they were originally designed for, namely for revitalizing. Now, the fact that TIFs are so actively discussed and are clearly, as we'll show in a moment, widely used, may mean that TIFs are an attractive and effective instrument perhaps for something else. And that something else is indeed, and that's my hypothesis, that something else is indeed the silent budgeting or clawing out of the general fund additional revenues or earmarking revenues for other purposes that allows local municipal governments additional flexibility. And why would local municipal governments have such a large interest in relying on this special instrument to siphon off funds, to do fun stuff? No, not necessarily. Well, why do they? Because there has been such a tremendous amount of pushback on what local governments were allowed to do with their revenue. America is full of stories starting in the late 1970s of property tax revolts, Proposition 13 in California. In the same way, Proposition 2 in Michigan was purportedly on the outside really about school equalization financing, but at the same time it was also about the structure of local and municipal finance. And so I argue that TIFs are, even if they might not necessarily work in inverted commas in the way that we have in the way that we outline in our textbooks, TIFs might be a very attractive way in which governments can keep on doing what they have to do in a climate that is fiscally increasingly very, very restrictive and conservative. Okay? All the more reason, I would argue, that we need to know precisely how widely TIFs are relied on and what types of TIFs are being used. Now, I've already highlighted a lot of what's in this slide, namely that we have a hard time explaining on the basis of the scientific evidence why TIF usage has accelerated so much over the last years, other than assuming that there are other reasons than blight remediation that make it very attractive for governments to use TIFs to engage in a form of local economic development that might not necessarily be as complex or as politically difficult to maneuver in terms of steering the outcomes as is discussions about the general fund. Many of you, if not all of you, will of course remember how difficult it is at the local level to talk about a signage of fractions of millages for public purposes. Doesn't happen with TIFs. You can create a TIF district, divert the revenue, and the public never has to vote about it. you know, public transit millages, how hard a time have they been having at the ballot box? TIFs, in that sense, are an easy way to bypass the ballot box and to do stuff that in broad terms is related with redevelopment. Now, in many ways, this is where the narrative becomes frayed. The original intention was for TIFs to increase employment, but what TIFs really are doing, if you recall what the graph was showing, is that TIFs really increase the growth in the tax base. And so another problem in the way that TIFs have been phrased and have been deployed thus far is that we have this tension between the maximization of the tax base growth versus what it is that's happening to employment. The issue of fiscal fragmentation is one that I've mentioned at the very outset. This is ultimately, from a public finance perspective, the largest concern for TIFs overall, which is with government activities at the local level fragmented into so many special districts, so many special entities, how do we have a consolidated view of what's going on? And in part, our research wanted to contribute to establishing what this overall consolidated view was. Because again, imagine this somewhat tenuous analogy of a bank holding company not being able to consolidate the balance sheets of all its branches. It would be rather strange if Wells Fargo couldn't produce a consolidated state of affairs for its entire operations in the United States simply because it didn't know what the local branches were up to. And so in that same way, it doesn't strike people, strangely though, as unusual that when it comes to local government, we make no such demands. We're quite happy that we don't know what the net indebtedness of a specific community is, because we say, well, there is the school district, well, there is the water board, well, there is the TIF district, well, there is the municipality, and then there is the county, etc., etc. So it's very difficult for us to think or to hold in our minds this notion that in order to engage in fiscal policy in a sound way at the ballot box, we need sound information about the state of affairs. And this shall be my last reference to Proposal 1. This is in part the difficulty with direct democracy or fiscal policy at the ballot box currently. We don't have enough information at our fingertips in order to make informed decisions. And I personally, for one, am very interested to see what will happen to Proposal 1, because I think, despite the fact that many people are not opposed to it, it might not go through on the simple basis that it's too complicated for people to understand, and it raises too many uncertainties as far as revenue sharing is concerned between state and local governments, which then introduces additional uncertainty when what government ought to be doing is reducing uncertainty. But that's a minor tangent. I'm going to speed up a little, given that this material would, for the second, we're roughly at the halfway point as far as slides are concerned, certainly not in terms of time. But this next part of the presentation really is about our work itself, and that can be almost read online. And so I'm not going to walk through every single point, because what it does is it presents the results of our stock-taking exercise, given the larger context of the background that I've just outlined. Excuse me. And so, The current challenge for tax increment financing is that there is, despite there being guiding principles as far as reporting is concerned, there is no consolidated, let alone national, there is no state registry, there is no penalty for neglecting to report or the improper usage of TIFs in the state. So, what do we know? We think we know that TIF revenues went up over the last few years. The state treasury thinks that as little as 280 million in revenues were raised via TIFs. We think that this figure has to be a lot higher, and our best estimates are anywhere between 500 million to 1.2 billion dollars in revenues as far as TIFs. But that, strangely enough, ought not to be a matter of academic speculation, but in principle we should know. What is the number? Fact is, we don't know what that number is. What types of TIFs exist in Michigan? There is enabling legislation for originally 8 types of authorities. One of those authority types, tax increment finance authorities, is no longer allowed after 1987. But they range from downtown authorities to local development financing authorities to brownfield redevelopment authorities, neighborhood tax increment financing authorities to corridor improvement authorities, neighborhood improvement authorities, and finally water resource improvement tax increment finance authorities. Quite a mouthful. They all have different enabling legislation. They all have slightly different explicit purposes, yet our anecdotal evidence is that essentially this offers such a broad range that if you want to do something TIF related in your municipality, you will find a type. Now, the other question that of course we wanted to know in our stock taking exercises is how heavily do rely municipalities on one type of these TIF districts versus another. In the current discussions in Lansing about streamlining legislation, there is talk of just reducing this range of possible TIF categories down to perhaps 2 or 3, which in my opinion is certainly a very valid option to have. The key principle again behind this, though, such a decision should be, we ought to know what the current snapshot is. How many of those districts are there in the state, and how much money do they raise? And in a couple of slides, I'll show you our best estimate of what this is, the distribution, and you'll be seeing how widely those estimates range. Now, just very briefly in terms of the concepts, how does a TIF district get formed? Other than just be a line being drawn, there is roughly a 4-step process, from the intent to form an authority to the establishment of the authority, which has needs a plan approved, and has a TIF plan approved, and any given authority can have multiple TIF plans, and then in the last step the authority is being active. And so step 1 in and of itself, and we're trying to stylize and streamline these individual steps here. These steps in and of themselves have a variety of different requirements, and once we release our report, I would invite you to carefully study what these individual elements, hurdles really are to disclosure and reporting. The key aspect of the reporting and disclosure process anywhere in the regulatory system is, of course, that people do report as they ought to, and that somebody checks whether they're reporting or not. So just saying that they should report isn't enough. There needs to be a certain amount of verification what the compliance rate is. And in the case of TIFs, given that the reporting requirements are indeed fairly complex and non-standard across all of these different types of TIF authorities, perhaps unsurprisingly, the reporting incidents are not 100%. We estimate that roughly only a third at best of all districts are actually reporting the amount they ought to report. Now, as far as the specific TIF plan approval process is concerned, again, there is a fairly elaborate requirement that varies marginally across these different types, how a specific plan that needs to get submitted to the governing body, which can be the municipality, needs to be published in newspapers, and there need to be public hearings, etc., etc. And so there are sort of accountability mechanisms in there, but once a plan is approved and up and running, our research shows that there is very, very, very little additional control and reporting that's going on, and perhaps most importantly, very little additional supervision from the state. And so the authority operation, there is the requirement to provide annual documentation. It is very technical and fairly imposing. There is certainly a large cost to complying with that regulation, and if we know one thing from the economics of regulation, then is that anything that is a cost, rational economic agents want to minimize. And so one way of minimizing the cost of regulation is by not complying, and I think that's a large part of the story in Michigan. This is why we have such low compliance, is because the regulatory burden of disclosing what you're doing in terms of TIF activities is just too high. And so what we need is not less regulation in many ways, but we need smarter and slimmer regulation, and the MIRTIF, the Michigan Repository of Tax Increment Financing, is one way that we hope that such slim and standardized reporting could look. Speaking of the regulatory process and the regulatory oversight, there is a whole host of state level to local level bodies that are involved in regulating a subset of these entities, including the Treasury, the State Tax Commission, and the local governing body, all of which have some form of regulatory and supervisory oversight in this process. Brownfield redevelopment authorities are slightly different, not fundamentally different, but they have the Michigan School Finance Board also involved, the Department of Environmental Quality, and so the regulatory process is perhaps as complex and as variegated as the number of authorities. And I think in many ways therein lies part of the compliance issue. The tax collection process itself, despite the slimmed down simplicity of this graph, is in all technicality a lot more complicated, but essentially consists of 4 steps, all of which comes with a tremendous amount of paperwork and compliance cost associated with it. It's in that sense, running TIFs in the state of Michigan is well, I'm going to have to be very careful here, but I would argue that it's probably as inefficient as running Medicare using paper-based forms. It's just there is a huge amount of complexity in a historically grown system that people are just too tied up with running the day-to-day business with, that they can fully get a hang of the system. And so if you're interested, there are different exemptions to the opt-out process that I mentioned earlier that we all have here in this slide and in the rest of our report. In particular, here is the opt-out process, what needs to take place. But again, what we have done in terms of our map making and fact finding on screen, of course, looks a lot easier and more straightforward than in the actual day-to-day operations of state and local government is actually the case. You know, we have we've done anecdotal spot checks and spoken to a variety of government officials in Washtenaw County, City of Ann Arbor, and equalization offices at the county level across the state. And rest assured, what we make look so straightforward, I hope, in one way, and clean, is in an applied setting across 82 counties in Michigan, not a particularly slender or lean aspect of public administration. Now, I'm rushing towards the end. Part of our argument for having more disclosure as far as what's happening on the TIF front is concerned is so that we can make sound analysis as far as what TIFs are really being used for. What is the revenue being used for? How much of it is being used for public infrastructure, land acquisition, debt service, planning costs, redevelopment costs, and so forth. And again, at this point, perhaps surprisingly to some of you who've tuned in, we just don't know. We don't know. And so there is constant changes to the regulatory framework. We have an example of how a TIF plan might actually work, but given that we're running slightly behind schedule, I want to finish off by just briefly giving you what we think the MER-TIF prototype could look like. What we've done is we have worked and had the fortune of having made available to us data from throughout the state in terms of how much other people have already collected information on TIFs, and this is definitely the Citizens Research Council has been very helpful and forthcoming. They have, in 2007, they did a survey of economic development programs in Michigan. We've scoured the academic literature on TIF practice in the state. We've scoured websites. We had conversations with Treasury officials, MEDC officials, and so forth. And so all this has then given us, and this is perhaps the only quantification that I can make, and I've been constantly waving my hands unbeknownst to you when we do this in terms of, so how prevalent is the usage of TIFs? And so what you see in this table really is different estimates. The columns are different instrument types of brownfield authorities, corridor improvement authorities, and such. And I just want you to focus on the last column, which is the total column. And every row represents, in a sense, a different estimate of how many of these authorities there are in the state. And so what you can glean from this table really is that the range of what different entities or different information collection efforts give us is we have anywhere between about 300 or about 500 to close to 1,200. That's our range of how many TIF and TIF-like authorities are there in the state. And so, again, going to the beginning of our research, we would have thought, well, this should be, we should have a lot more, it should be a lot easier to answer that question, and we should have a lot more precision in those numbers. The reporting reality on TIFs is that the revenue collection is not emphasized. The reporting itself currently is complex, bewildering, complicated. There is the stuff that is being reported is sometimes inconsistent, and there is missing data. And so what we had hoped is that to streamline all of this, to reduce the cost of reporting, to have a simplified electronic reporting system that could not only benefit the state in terms of knowing how prevalent the usage is, but also in terms of helping public sector analysts, private sector analysts use that data to do specific analysis. Now, what do I specifically have in mind? Well, on the federal level, for instance, the Community Reinvestment Act and the Housing Mortgage Disclosure Act of 1975 and the CRA of 78 and 9, they have brought with that legislation a clear mandate to what type of data ought to be collected, not only for regulatory oversight, but also such that people in the public could actually analyze the data themselves and form opinions about specific topics. And so today you can download the HMDA data, which captures every mortgage transaction in the United States in a given year, and you can analyze it. It's of course anonymized so that you don't figure out who's who, and it's aggregated at the census tract level, but we have information about every single transaction in the mortgage market that takes place in the United States. In the same way, the MRTIF is our hope that we have a unified prototype that gives us this oversight. And I'm going to spare you the details of the precise prototype. I'm going to flick through, and once the PowerPoint presentation is up online, together with the publication of our report, it has all the detail of how we think that this blueprint, what this blueprint should look like, including a fairly sophisticated data dictionary and data structure that is not only capturing every single legal requirement, it captures current reporting data from the Treasury side, but it also adds and fills what we think are publicly important fields that ought to be collected, and so that we have basic information from the locality, the governance, and the reporting. We suggest that there ought to be detailed information about the TIF plan and the annual reporting figures, and there ought to be standardized information about the start and end date of development plans, about the initial assessed values of the development area. That's not something that's currently being reported at all, and that there should be fields that would make the comparison of plans amongst themselves a lot easier. And so one can look towards Chicago for TIF reporting best practices, but I think given that Chicago is not necessarily representative of what's happening in the state of Illinois, we suggest that starting at the state level first is perhaps more useful than just taking the Chicago model and building it from the bottom up. And so there is a certain amount of agreement in principle amongst practitioners that this is what should happen, and you can read about it in terms of what these principles are to increase public accountability. We have a variety of critiques of the Chicago approach. Most importantly, what we think is that having a public policy discussion about the future of TIFs in Michigan is, of course, very, very important. But we also think that we cannot engage in such a discussion unless we have better information about the conduct and the regulatory enforcement and compliance of TIF legislation. Because then, and only then, can we make sure that TIFs are part of the regular financing mechanisms that municipalities have at their disposal, but that the state can exercise its regulatory oversight in a way that was originally intended in the law. And with that, and only 15 minutes over time, for which I do apologize, I leave it at that, and I hope that I have been able to, as it were, perhaps whet your appetite a little bit for something that is not necessarily always at the forefront of people's civically engaged mind, that is, regulation and regulatory compliance matters a great deal in a democratic process, because only if people play by the rules and we enforce the rules do we know whether the rules are actually working or not. One of the strange predicaments that many industrialized countries are finding themselves in, and America in particular, and Dodd-Frank reform of the financial sector is testimony to that, is the system failed not because necessarily regulation was bad, but because regulation wasn't enforced. And now we are throwing that baby out with the bathwater and implementing new, much more complex regulation, which again won't be able to be enforced. So we will never know whether the regulation actually ever would have worked, because it's not being enforced and people are not complying with it, because complying with it is so cumbersome and burdensome. We're hoping that our research contribution helps to shed some light onto these questions. That's it from my end. I see that there are still a number of people there. I'm very happy to take questions at this point. Here are some academic references. I can be reached at this email address. My co-conspirator and collaborator, Carla Maria, can be reached at the email address that you see there. And I very much look forward to taking your questions now or at some later point.